Hello and welcome to What Goes Up, a weekly markets podcast. My name is Mike Regan. I'm a senior editor at Bloomberg.
And I'm Valdana Hayek, a cross-asset reporter with Bloomberg.
And this week on the show, well, since Valdana won't invite me to join any of her many book clubs, we're going to have one right here on the podcast. So break out the Pinot Grigio and your comfy pants because we have a great guest this week to talk about a very important and timely book. Not only is she one of my favorite colleagues, but she also helped former Federal Reserve Chair Paul Volcker write his memoirs. And to boot, she has a fascinating piece out in the latest issue of Business Week about Volcker's reputation as an inflation-fighting superhero and what lessons his experience holds for the current Fed as it tries to play that same role. But first, Valdana, confess, have you read the whole book?
100%.
You're 100% of the book?
Yes, and I have proof.
Don't spoil the ending for me.
This won't spoil the ending for you, but I know you'll know that I read all the way through because the acknowledgments section, I even read that. And
oh my God.
And Volcker in it talks about our guest so nicely. And this is all at the end of the book. So this is my proof.
All right. Well, you've just
Did
wrote,
you?
That was a spoiler. That was a spoiler of the acknowledgments. I never make it to the acknowledgments. You didn't read the footnotes, did you?
Of course I did. Are you kidding?
Oh my goodness.
I was hoping to learn from them and learn I did.
I confess, I've read most of the book. I had a very busy weekend. You know, it was parents' weekend at my daughter's college. So there was a football game and a tailgate.
Of course.
And that's a lot of activity for a guy my age. I hardly even got a single nap in all weekend. But I think I read most of it. If you count the pages in the middle with the pictures,
yeah,
then I read most of it.
You read most of it. Okay.
Yeah,
just to make you feel even worse, the Bills were playing on Sunday. And I didn't watch the game because I sat around reading the book.
Oh, my goodness.
Yeah. So I hope you feel really bad.
That's commitment.
Yes.
I do feel bad. But it's what I read is excellent. So why don't you bring our guests in here? Who are we speaking to?
Let's hear what she has to say about you not reading. It's Christine Harper. She's editor of Bloomberg Markets magazine. Christine, thanks so much for coming on the show.
Thank you so much for having me.
And to be fair, I don't even read all the stories I edit sometimes. You know, it's...
That's good.
but Christine, why don't you start and just tell us how you got involved in this project and sort of what the division of labor is when you write a book with such a legendary figure like that.
Well, I can't speak for how this normally works because I think this was a really exceptional sort of lightning bolt experience for me. I'd never written a book, and I just happened to know somebody who is in the publishing business. And a mutual friend came to me and said he'd suggested my name to this friend in the publishing business as somebody who might be able to help Paul Volcker write his memoir. So the guy in the publishing business, whose name is Peter Osnos, calls me up and he says, would you be interested in doing this? Paul Volcker is getting quite old. He wants to write his memoir and he just needs a little help. And I said, well, I know nothing about writing books, and I'm not really an expert in economics, so I don't know why. And he was like, listen, just, go talk to him. It should be somebody in New York, and we want to make it his book and not bring in somebody who's going to make it their book. And I said, well, that's fine. I'll do that. So, and I thought to myself, no matter what goes wrong here, the worst case scenario is I get to spend a bunch of time with Paul Volcker. How great is that? So I had an introductory meeting with him in his Rockefeller Center office in sort of late summer 2017. And he was absolutely charming and absolutely, great and clearly had no qualms about working with an untested person like me. And so we just started meeting on a very regular basis at his office, at his home. He would tell me stories. I would record them. I would get them transcribed. We would talk. And then eventually he started writing and handing me pages and handing his secretary pages to type up. And I would give him feedback and we would talk about it. And so, yeah, it was just, it was great collaboration. He wrote a lot of it himself, a longhand on yellow legal pads. I had it typed up by his amazing secretary who could read his handwriting, which is not an easy thing. And then I would sort of edit it and make notes and changes, and he would read it, and then he, in his illegible handwriting, write all these notes on it. He was very, very involved. He had a great attention to detail, a great interest in making sure we always chose the exact right word. And I wasn't expecting that, but as I worked with him and as I learned more about his career, it became clear to me that so much of being in the roles he had was about really perfect communication. If you read some of the Fed minutes from his time as chairman, the discussions are all about how to convey exactly the right way in their, in their statements and in their communications what they were trying to achieve. Because of course back then they didn't announce what the Fed funds target was. They would do it. The open markets desk would make it happen. They did announce the discount rate, but it was a lot of it was just communication. So he was a great wordsmith, a great communicator. Really cared about how to tell the story. Had a lot of stories to tell. Didn't really want to focus mostly on the inflation episode. That was one chapter for him of a career that's full of amazing chapters. And it was just delightful. And he and I worked on it really quickly, got it done in, I guess, less than a year. Which is really impressive. Yeah, and but he was a motivated guy. He was very disciplined. So and then unfortunately he got sick right towards the end, and died a year after it came out. So it's really sad because he would have a lot to say today. But I think in a way he knew that his lessons would be of value to people in many ways going forward, and so he tries to impart them as clearly and impactfully as he can. And I want to get to all of those things, but I want to ask you one more question about the actual process, because I really like the stories about his childhood right at the start of the book, and how I think there was one story about how he had this allowance that it was the same amount he was getting weekly or monthly that his sisters years beforehand had been getting, and what that taught him about inflation. And then I think later on in the book, he mentions something like he had been pulling out files specifically for the book, and he was surprised by the things that he found and the notes that he had scribbled in the margins. So maybe you can just talk a little bit more about the process and what it was like where he, for him to be digging out these historical documents. Yeah, I mean, it was great fun because not only did he have documents that either had been sent to him by people he'd grown up with or he'd sort of come across at some point. But occasionally I would come up with something that, he may have overlooked. And so he was always delighted when something came. And there were also some stories he told me in our discussions that I recorded that when I said, oh, should we tell this story? He'd say, no, let's leave that one. Yeah. And actually one of the funniest moments, right towards the very end of writing the book. I think actually it was already in galleys. It was pretty far along. And I was in his study in his apartment, and he said he had like a first edition of like Keynes or something in his library there. And so I was looking around on the bookshelf trying to find it. And I couldn't find it, but I found this other slim volume, which was an economics textbook from the 1920s, or maybe even before that, I think maybe the 1910s, that had been his mother's textbook in college. And it was and it was filled with marginalia, the notes she'd written. And if he'd ever realized he had it, he'd totally forgotten about it. So he was sort of, discovering this. I'd handed it to him. We were looking at it. It was amazing. And from her time at Vassar, right? At Vassar, exactly. And it was, I think the Fed had not been created. It was like really amazing. And so one of the notes she'd written to herself was about how psychology was the real key to so much of what was happening in what happened in economics and finance. And I think that really was kind of a eye-opener because he credits his father a lot with his interest in public service, but he also credits his mother as having been quite interested in markets and quite smart about them. And he quotes her a few times in the book. But we ended up adding this little bit about his mother's economics textbook and her note to herself about how psychology was really important. Because, of course, if you look at what Volcker did during his career, he really understood the psychology of investors, the psychology of consumers and business people, and so much of what he did in the inflation fight was basically around changing the psychology. Yeah. So it was cool to realize that his mother kind of knew that too.
That's pretty amazing. Yeah, setting the expectations, I guess, is so important for a central bank. But I became fascinated with his father a little bit too, because Christine, I think you and I both sort of cut our teeth in journalism, covering small towns, small municipalities in Pennsylvania, and I was in Pennsylvania for a while, in New Jersey. I think you were in good old Delco outside of Philly.
That's right.
For a while.
Yeah.
And so Paul's father was a town manager. And I'm not sure if everyone appreciates in these small towns how that works. You have a sort of a part-time, unpaid or lowly paid council and a lowly paid mayor. And then you bring in a manager who is supposed to be non-political at all. And that was Volcker's father, I guess, in Cape May and in Teaneck, New Jersey, a few other towns.
Actually, Vildana might know this from having read the acknowledgments, because he does say in his very, very kind words about me at the end of the book that I actually thought his father was the real hero, because I did become fairly obsessed with his father. The more I learned about his father was a huge deal in New Jersey. Yeah. And it was because, so his father was the son of German immigrants, grew up in Brooklyn, studied engineering, became an engineer, worked on the Erie Canal, met Volcker's mother up in the town on the Erie Canal. But then ended up discovering that there was this interest in kind of city managers, right? Like these professionalized city managers, because, that was the era of like total corruption. I mean, American politics had gotten into the cesspool. I mean, you can argue.
Not like today's claiming.
But I mean, it was all cronyism, all 100%. Yeah. And so somehow, like, New Jersey had passed this law allowing these like city managers to be appointed to be kind of professionalize the way cities were run. And Paul Volcker Sr. was the first ever in New Jersey, first in Cape May and then eventually in Teaneck. And he had a remarkable effect on these communities. It was really an incredible turnaround stories. And so I was very keen on sort of opening the book, because actually when Paul would talk to me about the book, one of the key points he wanted to make was about public service. This was his real mission at the end of his life, is trying to professionalize and better educate people for public administration. He cared a lot about it. That's what the Volcker Alliance he founded is dedicated to. And it was all really what his father had taught him.
Yeah, well, I was gonna ask, do you think that influence of his father sort of having to be above the politics and, non-political played an influence on how he approached the Fed being, the same thing, basically outside of politics?
Yes. I mean, I think in all ways, but, I think when people think about Paul Volcker, they think of him as somebody who could kind of, see every side of the political argument and stay kind of above it. But also in the way that he sort of believed in a certain humility and sort of not seeing himself as above the people, right? Like, so his father, gave himself a pay cut during the Depression, spent weekends going out and meeting with the families of all the city workers, whether they were the, sanitation workers or whatever. It just didn't matter. He was very, sort of engaged in this sort of very, democratic with a small d way, with the people. And I think that was also something that Paul Volcker brought to, his belief in being basically kind of a servant to the people more than like a ruler, I mean, so he was above politics, but he always, saw himself as sort of there to serve.
And Mike mentioned that you have this piece out in Business Week that recaps a lot of what we were just talking about and what's in the book. But maybe you can just lay out for us what the environment was like back then when he became Fed chair, and what some of the comparisons are to what we're seeing today, because we had high oil prices, I think, is one of the main things he had been talking about. So maybe just lay out the environment.
Yeah. So he was appointed by Jimmy Carter to be Fed chair at this period of horrible inflation in 1979. Really, things had gotten out of control. You'd had a huge energy crisis with, there was a big issue with the Saudis and the other Arab states. And so nobody had been able to deal with the inflation problem. There was also quite a lot of power in the labor unions back then. So the negotiations for wages were much different from I think they are today. So that I think is a difference. But yeah, it was. I mean, the inflation problem was much more entrenched back then. It had been going on through most of the 70s. People had sort of failed to recognize during the late 60s and early 70s how much the war spending was contributing to inflation. The war, big Vietnam, and there were just a lot of factors. Even the role that Volcker was involved in taking the dollar off the gold standard at the beginning of the 70s under Nixon. And that played a role. I mean, basically the dollar was no longer anchored to, gold. So there was this, decade-long kind of, creep in prices. And it had gotten so that people just assumed prices were going to go up double digits every year. And his predecessors as Fed chairman had basically kind of thrown up their hands. They didn't know how to do anything about it. Because every time they would try to start raising prices, they'd get all this pushback, or try raising, interest rates, they'd get a lot of pushback, so much political opposition for obvious reasons. There was, a law passed in Congress, which is known as, now the dual mandate, they talk about it, which sort of required the Fed to make employment one of its goals as well as price stability. So, when Volcker became Fed chairman, he knew, he'd been New York Fed president, that the problem he needed to address was inflation. He told Jimmy Carter that when he went to meet with him. He thought maybe that would prevent him from getting the job because he said, I'm going to raise rates a lot. And Jimmy Carter appointed him anyway. And he really admired that Carter did that because he thinks it contributed to him only being a one-term president. But he came into the role saying inflation is the job I have to focus on. I'm going to ignore all the other factors. He said the Fed economists at the time were telling him the economy was about to go into recession, but he kind of disregarded them, and he had to, raise rates as strongly as he could.
One thing I think is underappreciated, Christine, that I've really come to realize by reading the book is that so much focus was on that aggressive campaign to raise rates. I mean, sometimes it'd be a few rate hikes within a few weeks, right? I mean, they were very fast and aggressive about it. But there's also the notion of he sort of embraced to some extent the ideas of Milton Friedman and the so-called monetarists. The idea that to control inflation, you also had to sort of control growth of the money supply. And he referred to it as practical monetarism. So I wonder if you could talk a little bit about what that means. But also, I get the impression that he maybe wasn't sure what exactly role that played in taming inflation compared to the interest rate increases. For one thing, it's just so hard to measure the supply of money. He ran into some difficulties with that. But talk us through what you think, the legacy of that sort of part of his inflation fighting campaign is. Was that an important part of it, do you think?
Yeah, absolutely. But I think that goes back to the stuff we were talking about with his mom and the whole psychology thing. Because when he was earlier in his career, when the idea of monetarism was first being introduced by Milton Friedman and other people, the idea was much more mechanistic. It was sort of to the degree that there should be a Fed at all. And some people didn't even believe you needed a group of human beings. It should just be about figuring out what the optimal supply of money in the economy was to prevent inflation, but also to allow the economy to grow, and just keep that supply, steady and make sure it didn't get, beyond that. And nothing else. No other human judgment should be involved. It should be like automated, basically. And obviously, when he was early in his career at the New York Fed, nobody he worked with agreed with that, right? There were a bunch of people working at the central bank. So he was kind of raised with this is a foolish idea. Monetarism is kind of, crazy and it won't work. When he got to be Fed chair, it's actually interesting looking at some of the correspondence. I have some of it where he's writing to Milton Friedman, actually, after he was appointed Fed chairman. and sort of hinting that, he may, he may do some things that that Friedman would agree with, but he was sure Friedman would still criticize him. I think what he knew going into the job was that what they were doing wasn't really working, right? They're just like setting interest rates higher and higher, because as long as you were able to, as long as politicians and everybody could see human beings were setting these interest rates, there was always going to be pushback. There were always going to be human beings who couldn't stomach it, right? So in the second time they raised rates when he was Fed chairman, there was a split on the committee. And he was confident that the 4 people who were voting for higher rates would keep doing it. But he realized the market wasn't convinced. So he had to do something different. So he basically used monetarism as kind of a tool. So he didn't employ it in the pure way that the real monetarists would have wanted. He just basically used it as a psychological crutch. So the Saturday night special, October 6, 1979, called the Saturday press conference, announced a series of changes, including a rate increase and a whole bunch of, different factors. But the main thing was, from now on, we're going to target the money supply. And what that essentially did is it sort of tied their hands. It said to the market, it's not us human beings who are going to be setting interest rates anymore. We're just going to focus on the money supply, and the interest rates will do what they do. We're going to focus on the quantity of money, not the price of money. The price of money, it'll do what it does. Interest rates will do what they do. So they had this idea that they would have an upper limit and that they would revisit it. If rates got to an upper limit, they would look at it. And it kept getting to the upper limit, and they kept saying, okay, we got to let it go. We got to let it go. He says in the book that if he had realized at the outset how high rates would get, he might not have been able to do it. And so I think that's a sign of how successful that strategy was. Because if he had to, as a human being, vote for those kind of interest rates, he would have found it too difficult. But when he was able to say, this is not our decision, it's what's happening because of our money supply decisions, it was a little easier to stomach. So it was kind of like used as a psychological trick. And then they abandoned it as soon as they found it kind of inconvenient. So it wasn't ever pure monetarism, but that's why he calls it practical monetarism.
Maybe one thing that we can't get out of the book is the maybe uncertainty that he had felt, or unease or confusion, or I don't even know, use any words that are synonymous with that. And possibly he told you about that time period and what it actually felt like for him to be working through it. Can you talk about that?
Well, it's funny. He was a little unwilling to really engage. I mean, there are some biographies that have been written about him, which tell stories about how, like, when he got nervous, he would go to the men's room a bunch of times or things like that, So, I mean, he definitely felt it. But at the point when I was working with him, he a little bit sort of, brushed it aside. But even so, I could still tell, even at age 90, it was still weighing on him whether he'd really, he felt the criticisms that are still leveled at him today from like people on the left or people on the right, that, there would have been another way. And so he wrestled with that. I remember, there's a famous book called Secrets of the Temple by William Greider, right? He was reading it when I was working with him. He was like, he would talk to me about stuff he was reading, these criticisms, and how he didn't agree with them. But like, he wasn't ignoring them. And I thought that was really interesting, because you could still tell that he wished there had been another way. He felt the pain that he had caused. He struggled with it, but ultimately he couldn't think of any other way. And he understood that the value that bringing down inflation had for the people.
And it's interesting. I think ever since the Fed was created, there's been a backlash against the Fed and sort of critics and end the Fed or audit the Fed type of people. But boy, that really reached a fever pitch during his chairmanship. Could you talk to us a little bit about some of the protests and some of the backlash that he faced?
Yeah, no, he had the farmers who, rely on borrowed money for planting their crops. They surrounded the Fed headquarters with tractors at one point. The home builders who, because mortgage rates eventually got up above like 18%. They all were sending 2x4s to the Fed with like angry messages. His speeches would be interrupted by screaming protesters. He apparently once somebody released rats in the audience of one of his speeches. I mean, whenever I would bring these things up, he would sort of go like, oh, it was a bunch of Lyndon LaRouche fans. Like he sort of brushed it off as like, that wasn't what the people really felt.
He had to get security, right?
And he had to, he didn't even remember this. I found this in some of the documents in the Volcker archives, like the letters that were written to him by the Fed security department saying, we have to get you personal.
And he was 6'7", right?
Yeah, he was a tall guy, really imposing. And actually a really fascinating thing is that I found this story from about a year after he got the bodyguard about this armed man who went into the headquarters of the Fed. I think he was carrying a knife and a gun or something. He was angry about inflation and interest rates. And he luckily didn't get near any of the Fed people, but he was arrested. But I found out that same guy later ended up killing somebody. After he got out of jail. Yeah, I think he was the guy who killed a security guard in front of the Holocaust Museum or something, down in D.C. Anyway, so there were threatening situations. But Volcker didn't really like to dwell on that because I don't think he ever felt he was in danger. He always felt people made too much of it. And I think one of the most interesting things is that when he was Fed chair, a group of 500 protesters showed up at one point outside, and his, PR people were like, what should we do? We'll send them away. And he said, no, actually bring some of the leaders into my office. And so, I don't know how many people would do that today. Just sort of spontaneously said, let these strangers in. But he did, and a whole group of people were in his office debating it with him, and he ended up on the steps of the Fed afterwards, giving a sort of impromptu press conference with the leader of this National People's Action Group, I think it was called. So he didn't shy away from engaging with people, even though clearly people were really angry.
And what about the view of what he and the Fed were doing outside of the U.S.? Because I know he talks a lot about meeting with his counterparts in Germany and Japan and going through Europe on these 3 or 4 day trips. And so what was the view outside? Yeah.
So as you saw in the book, he early in his career was working in the Treasury Department under Nixon, and he spent a lot of time traveling around the world, including having to explain to all of our, allies around the world why we're going off the gold standard. So he had really good relationships with people in Germany and in Japan, in the UK, Italy. So he was kind of a monetary diplomat in a way. And when he was going to before he did the Saturday Night Special, he went to Belgrade for a big IMF conference, and Burns gave a lecture there about, how central bankers could no longer do anything about inflation. But by that time already, Volcker had met with the German, I think, chancellor and central bankers, and they were going crazy that the U.S. had allowed inflation to get so out of control, and they felt like the dollar was too weak and it had to do something. So they were desperate for him to do something, and he sort of basically said, "Don't worry, I'll get it under control." So he cared a lot about our relationships overseas, as well as what was happening domestically.
One thing I think is fascinating when we think of Volcker in this day and age, in this sort of a inflation, I don't know if you call it a crisis, but an acute problem that we have with inflation, all you ever hear about is, this inflation fighting efforts that he had. But reading the book, it's fascinating how many other fires he had to put out along the way. I didn't appreciate how involved he was with the Chrysler restructuring, for example. But what do you think? What would he rank sort of his legacy of some of those other issues he dealt with? The LatAm debt crisis, and I was fascinated to learn that the idea of too big to fail actually dates back to his time. So talk to us about some of those other fires that he put out.
Yeah, well, I think his earliest one was the one I just mentioned about the taking the dollar off the gold standard. That was a gigantic moment in this country's history when Nixon decided to sever that link, and that was a a huge crisis in its own way. And Volcker was right at the center of it with then Secretary of the Treasury, John Connolly. And he has some great stories to tell about that. So he'd sort of already like become this crisis hardened person by the time he got to the Fed. So inflation, was job one. But the result of higher interest rates, as I think some people in the markets now are worried about as well, is that there are often, if you've had a period of easy money, there are often a lot of bubbles that are forming. And then when rates go up more than people are really ready for, accidents happen. And so you see in the book, this section on fighting inflation, basically the experiment with monetarism and all of that. And then you see the sort of catastrophes that resulted and how he had to clean them up, right? So you mentioned, Chrysler was sort of a little separate, but you had Continental Illinois, which was a huge bank, which had exposure to these speculative oil loans that this bank, Penn Square, had originated. Penn Square went under. First Pennsylvania Bank had to be rescued. You had the savings and loan crisis a few years later. You had the Hunt brothers, which is a great, story of just these billionaire brothers who had speculated on silver because, of course, silver would never stop going up because inflation was never going to get under control. And then when rates went up, they couldn't meet their margin calls. So all these brokers started calling the Fed, help us. And he had to get involved, even though you didn't think the Fed should be involved in that. But yeah, he discovered the dangers that the financial system it has embedded in it. And then, of course, the biggest one was the U.S. and European banks had these huge loans to Latin American countries funded by all the petrodollars from the oil-rich Middle East. And these Latin American countries were no longer going to be able to pay them back. And in some cases, these loans were more than twice the, capital of the bank. So they were going to go under. So I think ultimately it was 1982. What really caused Volcker and the Fed to stop the inflation fight was they had to rescue the banks. And so, I think one thing to watch today is whether, we find ourselves in a similar situation. If you read the end of the book, he talks about like the biggest caution he has for central bankers is not only don't let inflation get out of control, but don't let the speculation that goes with inflation get out of control, because the combination of, out of control monetary policy and out of control financial speculation is the most damaging potential thing to the economy.
Well, let's talk a little bit more about today, because you wrote in the Business Week piece, to see the challenge ahead for Powell, it's useful to revisit Volcker's bumpy path to victory. And then I remember, I think it was at the Jackson Hole meeting a couple months ago, that Powell used a phrase that everybody recognized as being the title of your book, which was that they were going to be keeping at it. Right. And I think a lot of people were trying to make that connection between Powell and Volcker. So can you talk about maybe some of the lessons or what actually is happening today that
Sure.
you see these?
Although
Sure.
I like the wise old parrot title
yeah, I like
better.
that too.
I wish they would have gone with that.
Yeah. So when I would talk to Volcker about who should be Fed chair, at the time when Trump was considering new alternatives, he always expressed his view that having had himself experience in the private sector and in Treasury Department, that having that kind of practical experience outside of academia, he thought was incredibly valuable and important. And so he was a big supporter of somebody with Jay Powell's background, because he thought that brings you a little more in touch with sort of the effects of monetary policy and a little less focused on the theory. So I think when you look at today, he would be encouraged that Powell is in the spot. He would be very upset, and he expresses this in the book even before some of the later experiments with, sort of inflation targeting. He thought it was always a mistake for central banks to be trying to create 2% inflation. He didn't understand what that was. He thought that was a mistake and they were playing with fire. And of course, it turns out they were. I think he would be glad that Powell is talking a lot about trying to be more like Volcker. And I think he would just be concerned that, some of the speculation that we saw, especially like if you think about 2021, how crazy things got. I feel certain that if he had been alive during that, he would have been ringing the alarm bells pretty loudly. So I think he'd be disappointed that the Fed hadn't kind of figured it out. So, yeah.
It's just a fascinating book, Christine. There's so many little anecdotes that I love. Like when he noticed on the front seat of his driver's car, there was a book called How to Live with Inflation.
Yeah.
And he said that he knew he was on the right path because the driver said, well, the only reason I bought it was the price was reduced from like $10 to $2. But some of his, and I think we're going to have to segue to the crazy things soon, but a good segue for that is for me to ask, which I think is admittedly a crazy question. So I'm going to go ahead and do that. But some of his wit is very self-deprecating. He talks about being a procrastinator, and he often makes jokes about his height, 6'7". Honestly, I got to wonder if being such a big, imposing figure was an asset to him when sort of history needed this sort of very strong character. Am I crazy to think that?
No, I don't think so. I mean, I'm not sure he would have admitted this, but he really played a character, right? He had the whole cigar thing, he quit smoking by the time I knew him, but he would sit there and testify and smoke the cigar, and he was incredibly tall. He had this deep voice, and he had this just air of authority. And I think he knew that was, again, back to his father. His father had basically ruled this city and gotten it into shape, and his father was just as tall. So I think he understood, again, the psychology of, how to assert authority, how to he'd watched the politicians he'd worked with. He'd watched John Connolly outfox some of the other people in the Nixon administration. He was quite a astute student of people and how they are effective and how they aren't effective. He knew what he was doing.
That psychological effect of a big 6'7" cigar chomping, but it reminds me of those old memes you used to see of, a graph of interest rates and the height of the Fed chairman. It went from Volcker to Janet Yellen being the shortest. And then sure enough, here we are with Powell, and rates are going back up. So
yeah,
maybe there's something to it. But that's the craziest question I had. But I'm glad you played ball with that. I'm not as crazy of a question as I thought it was, I guess.
No. There's a great story that I once heard Bill Bradley, the former New Jersey senator, tell about how he remembered when, Paul Volcker used to go back to New York City every weekend, because his wife still lived in New York. So Bill Bradley would be going back to New Jersey for the weekend, and they'd get on the shuttle, which, doesn't really exist in the same format anymore, but the plane that went from Washington to New York, like on the hour. And they would just go and they'd sit in economy class on Friday night or Friday afternoon and get they'd be in like seat, 25, huddled up with their knees in the chest and, surrounded by other people. And it was just a different time. So.
Another Princeton basketball player.
Exactly. Right. Even taller than Paul.
Great stuff, Christine. We really appreciate your time. And I can't recommend this book as strongly as I can. I mean, it's such an important look at period of history that I think is very echoing loudly these days. So we appreciate your time, but we're not going to let you go until we hear the craziest thing you've seen in markets recently. Vildana, I think we'll start with you, though.
I have a pretty good one.
Okay.
But it's
you usually do.
It's Elon Musk related.
Oh, no.
No.
There's nothing crazy about him.
Nothing.
I think we might have the same one.
Oh, no. Oh, I hope not. But he's done so many things this week that honestly, it's True. Possible that it's... Anyway, he's promoting a new perfume. Same one? You have the same one?
I do, yes.
Shoot. But it's so good.
It is good.
Okay. He said it's called... This is so disgusting. Burnt hair. It's the essence of repugnant desire. It's $100 a bottle. And he tweeted, of course, that 10,000 bottles had already been sold.
And I don't know. I mean, I guess this is really happening. He's not joking around. It's you never know with this guy.
It's like the shorts. Remember, he sold shorts to target short sellers, and also the flamethrower.
The flamethrower.
Yeah.
And he said something to the effect of, with my last name, it was inevitable that I'd get into men's cologne.
That's good. That's really good. That's a good pun.
Oh, okay. Well,
Wow.
you jinxed us, but I was gonna do prices precise on the dollar value of the bottle. $100 a bottle.
I shouldn't have said it.
For burnt hair.
Perfume.
For maybe he's put those flamethrowers to work to get that scent.
Possibly.
All right. Well, great minds think alike, I guess, or even you and I occasionally.
Yeah.
How about you, Christine? What's the craziest thing you've seen recently?
Nothing quite as crazy. I mean, I'm watching very closely what's happening with the UK central bank, having lived in London and having a lot of friends over there, and watching the BOE trying to tell people on the one hand they're going to support, whatever happens. On the other hand, you only have a few days to clean it all up. And
I know.
So I think that's as crazy as it's getting. But, I'm sure it'll be more crazy. As soon as I walk out of this booth, there'll be something even crazier.
Something right.
Yeah.
Well, if you had to channel Paul Volcker and give advice to the BOE, what do you think you would tell him?
Well, I think he dealt with his share of exchange rate crises also, including helping Thatcher keep the pound above the dollar. So I think he would say, though, that you've got to deal with your domestic situation first. So I think he would encourage Powell to keep at it with the inflation fight and not be distracted by helping the pound out right now, probably.
That sounds about right.
Yeah.
Christine Harper, fascinating conversation and a really great book. I hope everyone in the What Goes Up book club will go out and read it.
Who's in charge of this book club, you or I?
It sounds like you want to be in charge of it.
I definitely do.
All right. You are the chair of the What Goes Up book club then.
My first order of business is kicking you out.
I knew it. I know just because I didn't finish the book.
Yeah. Must finish the book. If you bring wine to the next meeting, then you'll be
I mean,
brought in.
You're putting your children first. Like, I think your priorities are all mixed up.
Yeah.
All right.
This is why you were kicked out.
Well, you got to write another book, Christine, and we'll have you back. And by the way, read Markets Magazine.
Yeah.
Excellent Bloomberg periodical.
Yeah, Keeping at It by Paul Volcker and Bloomberg Markets Magazine, two must-reads.
That's our two must-reads for the week. Thank you, Christine.
Thank you, guys.
Thank you, Christine.
What Goes Up will be back next week. Until then, you can find us on the Bloomberg Terminal website and app or wherever you get your podcasts. We'd love it if you took the time to rate and review the show on Apple Podcasts so more listeners can find us. And you can find us on Twitter. Follow me at Reganonymous. Vildana Heinrich is at Vildana Heinrich. You can also follow Bloomberg Podcasts at Podcasts. What Goes Up is produced by Stacey Wong. Thanks for listening. See you next time.